Hello friends, welcome back to my channel. Easy Accounting Hub, make your study easy. Today I am going to explain accounting equation. This is for plus 1 students. It is very important topic, and for every exam one question is coming from this topic. It's very important. It is basic also. So, accounting equation, it is based on one equation, asset equals liabilities plus capital. So, total asset equals total liabilities. So, liabilities is split into two, liabilities plus outside liability plus capital. So, asset equals liability plus capital. So, let me explain. Accounting equation. Accounting equation is a mathematical expression which shows that assets and liabilities of a firm are equal. So, it is a mathematical expression. This is showing the assets and liabilities will be equal. It is based on dual aspects concept. So, what is dual aspect concept? Dual aspect concept means every transaction have two aspects, one giving aspect and one receiving aspect. Example, when I purchase this scale, so the receiving aspect for me a scale and the giving aspect is cash. So, I give cash and I receive the scale. For the shopkeeper, he is getting cash and he is giving scale to me. So, there are two aspects for every business transactions. So, that is based on dual aspect concept. So, let me explain one question before that. Asset equals liability plus capital, that is our equation. Then liability equals asset minus capital. Then capital equals asset minus liabilities. So, that is accounting equation. So, one question. Ram started business with cash rupees 25,000 and check rupees 25,000. See, Ram invested total 50,000. 25,000 cash and he put 25,000 in bank. He invested total 50,000. So, as per legal entity concept, the owner and the business is separate. The company have a separate existence apart from its owner. So, as per legal entity concept, the company is liable to pay back this 50,000 to the owner at the time of winding up of the company. So, legal entity concept is telling where the company and the owner is separate. So, the owner will get 50,000 from the company at the time of winding up. So, this is 25,000 plus 25,000. This is cash and this is bank. So, a cash column is increasing and the bank column also there. Then capital also coming. So, 25,000 cash plus 25,000 bank increasing and the liability also increasing. So, the accounting equation 25,000 plus 25,000 equals 50,000. So, that is the first equation. So, that is the first equation. Then second one, purchased goods for cash rupees 1,000. So, purchased goods for cash, there is two aspects. One is goods is coming into the business and the cash is going. So, from cash we have to subtract and the same time goods or stock is increasing. A new column is there, stock column. So, stock is increasing by 1,000 and the cash is decreasing by 1,000. So, see, we got a new equation 25,000 minus 1,000, 24,000. Here no change, stock is also increasing. See, now take the total 24,000 plus 25,000 plus 1,000, 50. That is equal to this 50. So, new equation is tallying. So, the third one, withdraw cash for personal use from bank, rupees 700. From bank, he withdrew rupees 700 for personal use. So, what all he is taking for personal use? We have to subtract from his capital because he invested 50,000 and he took back 700. So, we have to subtract from capital and the same time bank also reducing. So, we have to minus from bank also, capital also. Now, a new equation is there. Here no change, 25,000 minus 700, 24,300, 1,000 same. Here 50,000 minus 700, 49,300. Now, take the total 24,000 plus 48,300 plus 49,300. So that is equal to this one. So the third equation also tallying. Now the fourth one, received interest from bank rupees 100. So interest, bank is increasing because the bank give interest, added this 100 to our account as interest. So 100 bank is increasing, so plus 100 to bank, and what all we are receiving now, that belongs to the owner. So we have to add 100 to the capital. Now a new equation is there. This is also tallying. Now fifth one, purchased goods on credit rupees 4,000. Normally purchased goods on cash means cash is reducing, but here credit means we are going to pay in future. So we can call it as creditors. So creditors are liability, we have to pay it in future, no? So creditors column also adding. So creditors is increasing by 4,000, and the same time stock also increasing. So both side increased by 4,000. So a new equation is there, 24. Here no change, the stock is increased by 4,000, so total 5,000, and in capital there is no change. Creditors 4,000 increased. Now take the total of both sides, it will be equal. Next one is purchased furniture for cash. Furniture for cash 500. So cash is reducing one side. Now the next aspect is furniture. So whenever we are purchasing some asset like furniture, computer and equipments, then building, land, machinery, etc., for the business use, that we can call fixed asset. So this is for long term use. So that is fixed asset for the company. So we have to provide a separate column for fixed asset. Here furniture is increasing by 500, same time cash is reducing. See, so 24,000 minus 500, 23,500. Here furniture is adding 500. So take the total and check now. Both sides will be tally. Next is paid to creditors. Creditors payable 4,000 was there. Now 400 we are paying, and same time cash is also reducing. So now the new creditors liability is only 3,600, and here cash also same time reduced, and new equation is this one. Now paid rent, salary, commission, then telephone bill, electricity bill, all these all expenses. So all expense we have to subtract from capital account, because it is reducing the partner profit. So profit belongs to the owner, and the same time expense also need to pay by the company. So it will reflect in capital account. So all expenses we have to minus from capital, and same time we have to minus from cash or bank. If we are paying through check, rent paid by check means we have to subtract from bank. At the same time cash also we have to subtract. We have to check what it is, how they paid, by cash or check. So if it is cash, we have to subtract from cash. If it is bank, we have to subtract from bank. Now sold goods on credit, CP, cost price. Cost price is 500 for 700. So we sold goods on credit for 700. Its cost price 500. So there is a profit of 200 that belongs to the owner. So that 200 we have to add along with the capital and the cost price, that is from stock. Stock is reducing when we are selling goods, stock is reducing. So 500, this cost price we have to subtract from stock. Then the 700, this is on credit. Sold goods on credit means debtors. Debtors are increasing, so we have to add a new column for debtors. So debtors is increasing. Capital owner is getting profit 200, and the stock is reduced by 500. So that is sold goods on credit. It is affecting three places. One is profit for the owner, then debtors are increasing, then stock is decreasing. If this sales on cash, if it is on cash, we have to add along with the cash only. So here it's debtor because they are not paying now. It's a credit transaction, so we have to create debtors. Then paid petty expenses. So this is like all expenses we have to subtract from capital, then from cash also. Now took goods from business for personal use. So if the owner is taking cash or goods from business purpose from business for personal purpose, we have to subtract from his capital, and the same time goods, he is taking goods, that's why we have to subtract from stock. If he is taking cash, we have to subtract cash. So here he took goods from business for personal use 500, it is goods. So we have to subtract from stock, and the same time capital also we have to subtract. Then accrued income 200. So accrued income means income earned but not received. That means this income we will receive in future. So we have to add a separate column, accrued income. So plus 200, and this accrued income also belongs to the owner, so add along with the capital, that's it. So plus 200 to the accrued income, and the same time capital also plus 200. So you will get a new equation. I didn't write it a new equation because there is less space. So next also I have added along with that. Commission received in advance 300. So something we are receiving in advance, it's a liability, because if we cannot fulfill the agreement, we have to pay back that commission, that advance. So this is a liability, so we have to create a liability. This is income received in advance, their liability is increasing, same time we received, so 300 cash also we have to add. If we received check, we have to add along with the bank, but here we received cash. Okay, then interest on capital, interest on drawings. These two are affecting partners' capital account only, because interest on capital means the company is paying interest to the owner. Interest on drawings means the owner is paying interest to the company. So that will reflect only in capital. So plus and minus both coming for interest on capital in the capital account, and interest on drawing is also coming in the capital account. So that means there is no change. So plus and both plus and minus is coming. So take the total again, take the new equation, check both side, it's tallied or not. In this question, 23,000 plus 24,400 plus 3,900 plus 500 plus 700 plus 200 equals 48,900 plus 3,500 plus 300. This is tallied. So this is accounting equation. Hope you all understood very well. This is a little tough portion, but okay, we can, I hope all of you understood. Okay, I will come with the next topic, journal entries for +1 student. Please subscribe if you like my video, and please share it, and thank you for watching.